Good afternoon, everybody, and welcome to today's Open to Export webinar about insurance options for companies involved in international trade. My name is William Barnes-Graham, and I am the Senior Content Editor at the Institute of Export and International Trade. Just a quick note to say that we are all dialing in from home still, so if there is a lag at any point due to home Wi-Fi, please do bear with us. Open to Export is a free online service helping small businesses get ready to sell overseas through our step-by-step articles and guides, regular webinars, our export action plan tool, and our quarterly competitions. You can find out about all of these on our website at www.opentoexport.com. Open to Export is powered by the Institute of Export and International Trade, the UK's professional membership body for traders. Endorsed by the World Trade Organization and the International Chamber of Commerce as a small business champion, we offer a unique range of individual and business membership benefits, education and training catering for beginners through to master's degrees, and an always exciting and prestigious program of events and online events celebrating UK businesses' exporting achievements. The Institute continues to operate largely online, offering a range of digital support and telephone assistance throughout the pandemic, including digital training courses and export masterclasses, international trade surgeries which can be conducted over the phone, online qualifications provided by both the Institute and the partner UK Customs Academy, daily bulletins bringing you all the key trade stories, and of course the free articles and webinars on the Open to Export platform. With the transition period with the EU due to end at the end of the year, we do recommend you to continue your Brexit preparations, especially as many of the Institute's relevant courses are fully fundable by government grants. You can find out more information about all our support on export.org.uk, and please feel free to contact us if you have any queries. We will be running a live Q&A later in the session, and you can ask questions at any point using the question box on the control panel to the right-hand side of your screen. The general principle we will adopt is that we'll only ask questions that are relevant to the broader audience, so we won't be able to go into company specifics as such, but if you do have specific questions, we can refer you to our technical helpline afterwards. You can also download a PDF of the slides at any point via the handout drop-down on your control panel, and you'll also be able to watch a recording of this webinar on opentoexport.com/webinars within a day of it finishing. For now, though, I'm delighted to introduce our speaker today, who is Ian McKinney from Gallagher. Over to you, Ian.
Good afternoon, everyone. Hopefully you can hear me okay, and I've successfully unmuted. Is the common error that people often make. Thank you to William and to the Institute of Export for the opportunity just to go through some of these things. This is a fairly high-level presentation where the intention is really to give a bit of a flavour, and then hopefully we can have some time at the end for general questions. Happy to field whatever questions people have. If we could first of all start with just getting a bit of setting the scene a little bit, it would be useful for me to know what experience people have and what your background is, and maybe if I could hand over back to William to administer that.
Absolutely. So I'm just going to launch a quick straw poll. So the question is, what experience have you had of insurance? The options range from none at all to only my car or home insurance, a little bit of exposure, quite a lot of experience, or I am ACII qualified and know everything. Did I say that right, Ian? Because clearly
you
I'm
did.
not qualified.
Yes, you did. You did.
Excellent. So, I mean, Ian, I was looking at your LinkedIn earlier, and you've been with Gallagher for almost 3 years, and you describe yourself as an experienced risk and insurance professional with particular expertise in designing and arranging insurance and risk management programs. Is that a fair summarization of your kind of insurance experience?
Yeah, so unbelievably, it's almost 20 years that I've been working as an insurance broker, and it has gone pretty quickly. I had a few years in London working on multinationals. I then had you can probably, I'm sure people can tell by my accent that I'm from Northern Ireland originally. I had a few years in London. I then had a few years in Belfast, and then about 7 or 8 years ago came to the Midlands, and have been with Gallagher for the last 3 years. Most of my clients in my current world are global, with imports and exports, and some of the things that I'll talk about in this presentation are pretty common things that we come across, and so these are all a lot of sometimes there's a bit of mystery around insurance, and I think sometimes it's not quite as complicated as maybe what it's made out to be. And I guess the aim here is just to give a bit of background and an idea to people.
That's good. And just to show the results of the first poll, so 59% have said a little bit of exposure and 22% only car or home insurance, but you'll possibly be glad to hear there's no ACII qualified and know everything.
Good, yeah.
People on the line.
It's good. At least me is the only ACII qualified person, so that's good. That's good. Hopefully, no one will correct me now. Our next question is just about the areas that people work. Again, this is just to help me know where to pitch things. So it'll be useful to know where people are.
Great. And again, just launched that poll. So the options are finance, risk management, operations, sales, and something else or other. I know you'll probably talk about Gallagher a bit later on in the presentation, but could you give maybe a quick intro into what Gallagher do while people are answering that poll?
Yeah, of course. Yeah. So Gallagher is actually a US. Our parent is a US company, and Gallagher, our US parent, bought two pretty significantly sized brokers in the UK a number of years ago, Giles and Oval. Funny enough, when I worked in Belfast, I worked for Oval, and so when I joined Gallagher, all those people became my colleagues again. So that was nice. Gallagher, we have around 50 branches across the UK. We tend to operate, our aim is to be our slogan or our mantra or motto or whatever you want to call it, is that we want to be the go-to insurance broker in the communities in which we operate. So the kind of the buzzword there is community. But our communities can be very different depending on which branch, what specialism, what niche that the people work in. So our community could be a local area. It could be, for example, the community of businesses who export, which is what we're here today to do, or it could be anything else. But we do try to be very much a community-based broker, and we also have a very strong focus on ethics and ethical operation. We are on the list of the world's most ethical companies and have been for the last 10 years. We're the only insurance broker on that list, and we're very keen to do it right. So that's that. So here are our answers.
Yes, so 44% in others, but 30% operations, 17% sales. Not so many in finance and risk management, which is interesting. So yeah, on that note, I'll hide the poll and on to the main presentation. Over to you, Ian.
Great, thank you. Thanks, William. Thank you. So thanks everybody for joining us. We've got a bit of an agenda here. I'll talk a bit about the duty of disclosure, which is something that people often don't really realise or understand or know about. I'll talk a bit about some of the risk management that you need to do or need to be considering. I will go through some of the core, what I would describe as the core covers. These are the things that really, if you're going to export, these are things that you probably need to have. And then some other insurances and other considerations, and then we'll finish up with just a bit around Brexit and a bit around the current situation with COVID-19. So first of all, in terms of the duty of disclosure, this has changed in the last since 2015 in the Insurance Act, and which came into force in 2016. And in simple terms, up until the Insurance Act 2015, we were all operating under the Marine Insurance Act of 1906, which was a bit out of date. And what that previous duty of disclosure was that you had to tell the insurers any material fact. And a material fact is a fact that might influence a prudent underwriter on what premium to charge, what terms to apply, and whether to accept the risk. Now, it was felt, and rightly so, that the average person on the street, even in business, probably would not have an understanding of what a material fact is, and therefore it was unfair on policyholders, because what insurers could do is that they could just exclude, they could just avoid policies where the duty of disclosure wasn't followed. I think could we go back a slide? Sorry. Yeah, one more. That's us. Yeah. So the new Insurance Act duty of disclosure is that you have to make a fair presentation. And put simply, a fair presentation means that you have to make a full and frank disclosure of what you're doing, and that full and frank disclosure is after making a reasonable search of your records. So if you're exporting, and the reason I highlight this is just because people often don't appreciate this, and if you get it wrong, it can mean that you don't get things paid, you don't get claims paid. So things that would be relevant to making a fair presentation in terms of export would be: what are you exporting? What is it? What's the material? What's the product? Where's it going to? In what sort of volume? And who is it going to? Is it straight into the retail market? Is it to a distributor? Or is it something else? In terms of if you get those wrong, so if you don't give accurate information, there are two different remedies that the insurers have, and it depends on how the presentation was wrong. So if it's a deliberate or a reckless misrepresentation, so if you think, right, well, I'm exporting widgets and I'm exporting £1 million worth of widgets a week, but I'm going to tell the insurer that I'm exporting £500,000 worth of widgets a week because I want to cut my premium in half. That's a deliberate misrepresentation, and the insurer in that circumstance can void your policy, retain the premium, and not pay any claims. If it's not deliberate, so if it's a case of that you've made a genuine error, then there are some options available. The insurer can avoid the policy, but only if they wouldn't have taken the cover. And if they do that, they have to return the premium. Or if the terms are different, they can amend the terms to what they would have been. Or if the premium would have been higher, they can reduce the claim payment in proportion. So if your premium would have been 10,000, but you paid 5, and your claim is 100,000, they could give you 50. The key thing is just, if you're ever in doubt, most people who are buying insurance they export will probably have an insurance broker engaged. And if you do, if you're in any doubt about whether you should tell the broker, then you should tell them and let the broker decide whether it's relevant or not. So it's just important to get that out of the way, first of all, that the importance of making a fair presentation. That out of the way, moving on, then we will talk just a bit about risk management. So obviously, insurance itself, first of all, is risk management. So in terms of insurance, what you're doing is you're paying someone else to take the risk on your behalf. So you've managed the risk by paying someone to do it for you. The risk management that I'm talking about here is the activities and procedures and whatever you do put in place that is designed to reduce the risk of something occurring or mitigate its effects. This is becoming more and more important. I will talk later when we're talking about COVID and Brexit about where the insurance market is at and what's going on at the minute. But in very quickly, it is very challenging out there at the minute. Insurers are looking to increase premiums. They're looking to reduce cover. It's very, very difficult and challenging to get competitively priced, good value, good quality insurance cover. And what is key to getting the best deal is making sure that your risk management is up to scratch, because underwriters are becoming more and more selective about what risks they will, what plans they're going to underwrite, what risks they're going to underwrite, and so risk management is crucially important. Examples things that just to be aware of. So, first of all, compliance with different regimes. So if you're exporting, your product might be perfectly okay for a UK market, but is it okay for a US market? Does it meet all the standards? Are there any regulatory issues that you need to be aware of? Are there tax issues? And that is only going to become more relevant depending on what happens at the end of the year and whether we go off the cliff edge or not. In terms of transit, are there different options? What option, if there are different options, what are you going to use? Are you going to use your own transport? Are you going to use a third party? In terms of your product itself, have you done testing? Have you got quality control? Are things done in batches? Can you evidence all of that? If something goes wrong with the product, are you able to say, well, that was batch 25 on the 3rd of July 2019, and then you're able to do something about that. In addition, where does your product go? Is it going to be incorporated in something else? What is that something else? Is there a recall procedure? And finally, is there any access to any crisis resilience advice or assistance? We've had, obviously, in the last few months, we've had a serious global crisis. And in that circumstance, some companies have been left not really clear on what they should be doing. Some companies who have had either pre-arranged plans or access to good advice have been able to react quickly, and that makes a difference. And that means that when we're back up and running, they're able to bounce back more quickly. So risk management, crucially important. Again, there's lots of advice out there that insurance brokers will advise. Many insurance brokers will have risk consultancy experts as well as insurance experts. And these are just a few examples, but there are lots of things that you should consider. So into the cover then, so into the things that you need to consider. So if we go on to the next slide, first thing, and this is probably the most important thing, because this is if you're going to export and you're going to have claims, this is potentially your biggest area. Products liability. So in simple terms, that's liability for injury or illness or disease or death that's caused by a product. If you design, manufacture, or supply a product, then you need to have this cover, and that's even if the product is manufactured by someone else. You're just the middleman. There are some territories where there's a strict liability to injury caused by faulty products. So even if you didn't make it, you can't pass that fine or that claim back. If you do have the product's liability cover, as you should, it will cover you for claims made. Usually it's a worldwide cover. You've got to be conscious of the fact that if you're a UK business and you're exporting, say, to the States, and you have no assets or physical presence in the States, you might think, well, so what? And there are businesses who will do that. The only issue with that is that you'll not be able to trade there in future. And in some cases, insurers will go cross-country and cross-territory to get recompense. So if the incident occurs, I'm dealing with a claim at the minute where my client supplied a product. It was in Ireland, in fact. My client is a UK business, supplied to Ireland. The product caused a fire, which burnt down a house, and the insurer in Ireland paid that claim. And the insurer in Ireland are now suing my client in the UK court system, and that's being dealt with by their product liability insurer. Other things just to be aware of, quality control I've already mentioned, is crucially important, because if you do get a claim, what you want to be able to do is say, well, we tested this and it was fine when it left our factory, so therefore this must be something that you've done to it, or you haven't followed the instructions. Subrogation rights is that's a bit of jargon, but what it means is if you've bought the thing from someone else or if your supply, if the reason that the product has been faulty is because of something to do with the supply, with something that's part of it that's supplied by someone else, that you're able to pass that claim back. Some companies in their standard terms will say, we supply you what we're supplying you, but it's entirely at your risk. You hold us harmless against all claims and payments and whatever might occur. And what that does is that means that you can't pass the claim on to that supplier, and that then obviously leaves you more exposed to claims and to risk. Instructions, safety warnings are key, and also similarly to what I was saying earlier, those instructions and safety warnings have to be in the right language, in the right format, in the right presentation, with the right icons for each territory. And that's something that often people overlook. Record keeping, traceability, again, similar to the quality control. It's key to be able to defend claims, to say, this is what the thing, this is what we've made, this is when we made it, this is the process we've used, this is why we're confident that it was safe, and that's all aimed at being able to defend the claim. Limit of indemnity, something that people sometimes miss. Products liability usually comes along with public liability, and public liability, and often you'll get a policy where it's public and products liability, and the limit might be 10 million, 15 million, whatever it is. And that limit for public liability is usually an any one claim limit. So if it's £10 million limit, it's £10 million any one claim, and you could have 10 claims in the year at £9 million each, and that's fine. Products liability, on the other hand, is normally an aggregate limit, meaning that it's 10 million any one claim, but also 10 million in the policy period. So if it's a year-long policy and you've got a £10 million limit and you have an £8 million claim, you've only got £2 million left. And therefore, having an adequate limit is important if you're going to export in any volume. Obviously, you speak to your broker and work out what your exposure is and where things are going and what it looks like. And finally, on that, USA Canada exposure, the US, as I'm sure people will be aware, has a very long and an interesting legal history with a very litigious populace. So you'll recall all those stories of the McDonald's apple pie where it says caution, contents may be hot, and all these kind of things, all these very simplistic instructions, and that's because every single one of those can be traced back to some sort of claim where someone is sued, almost always in the USA. They have very extensive settlements and in the US, and it always, people often do not appreciate how large claims can be in the US, and it's very important to be aware of what your limit is. It's also important to be aware that if you're not exporting to the US and you're thinking about it, talk to your insurance broker first, because you could be shocked at how much additional premium it might cost to insure US exposure. In some cases, it's like 10, 15 times what the rate would be for the UK, say. So to turn that into numbers, if your turnover was 10 million quid, your premium, your products liability, and that's a UK, 10 million quid in the UK, your public and products liability premium might be maybe £10,000. If then you did an initial, or you did an additional £1 million into the US, so your turnover is now 11, 10 in the UK, 1 in the US, you'll probably pay the same amount of premium for public and products liability cover in the US as you will for your 10 million quid in the UK. It would be another 10 grand-ish. So sometimes I've come across where clients start exporting to the US, they've already started, then they phone their broker after they're doing it, and then they find out that the insurance costs end up costing them all their profit. So something to be aware of. You don't want that to happen. The next one, which is also key, crucially important, is marine. Sometimes marine cargo, sometimes goods in transit. That's loss or damage of goods in transit, as you would think. The there are a few common exclusions. Delay is a common thing, and that has been an issue in coronavirus. I have had a client who had things not, they couldn't get things from China, and then when things did come from China, they couldn't take them in the UK. Wear and tear, so just natural wear and tear, it's not going to be covered. Inherent vice is always excluded, which is something that the goods may be apt to do. So something that if you're sending something by sea and it's going to deteriorate on the voyage, then they're not going to cover that. Willful misconduct of the insured, which is just that you did it yourself, and the delightful term ullage, which is where if the container's not filled properly and the damage is caused. So the few exclusions. There are also, I'm not going to go into it, it's beyond the scope of this, but there are also different what they call institute cargo clauses, where there are different clauses that have been created over the years with slightly different levels of cover. That's something to talk to your broker about. The issues that we see most often, and these are the things that you need to be aware of, so these are the things that sort of pay attention to. First of all, documentation. So if you get a claim, so if you're exporting something, it falls off the boat, or the ship sinks, or there's a fire, whatever it is, the insurers will ask for a lot of documentation. They're going to ask for the invoices, packing list, the bill of lading. There might be a survey report. They'll want evidence of loss. They'll want the landing account. They'll want any correspondence. There's all sorts of stuff that they might want to ask for. So it's important that you have all that to hand, and keep good records. Survey. Sometimes if you're sending a single high value item, sometimes insurers might want to survey it. So have a look at it beforehand. How's it packed? Where's it going? In some cases, insurers even have a surveyor traveling with the thing. So I have a client who make very expensive, very complicated, very large types of equipment which are used in labs around the world, and they were sending something from England to China, and the poor surveyor had to go all the way on the boat from England to China with this magnet, with this item of equipment, because it was worth so much money. So you need to have spoken to your broker if you're gonna be sending things that are really high value. And I'm talking about multi-millions. Appropriate limits, accurate sendings. So again, if you this is something that you'll talk to your broker about, but if you have different contractual requirements and what your role is in the process, so you're the seller, you're the customer, import, export, are you going to insure a sale value or a cost value, or the cost insurance of freight, and who's responsible? All these kind of things, quite common, that we or you'll come across. People will say, well, I'm sending this by a third-party haulier, and therefore it's fine, covered. It's not always, depending on the conditions they're using. It could be a cost per ton, it could be a total value basis. It may or may not be sufficient to cover whatever the law says. In a similar way, being aware of what conditions are being used. If it's in Go terms, is it CAP or CFR, whatever it is. Again, not going to go into the detail of that, but these are things you just should be aware of, right? Discuss with your insurance broker. The single transit limit or a total limit, sometimes just to be aware that there are different ways that insurers will limit cover. So you might have a marine policy with a £500,000 limit. That £500,000 limit might be on a single transit limit, or it might be in any one conveyance. It might be different. There are other wordings as well. Very, very rare, but it does happen, particularly shipping from China to here, where you might have two shipments, two imports or two exports going somewhere, and they are two separate shipments, but they go on the same boat. So one shipment is 250,000, one is 300,000, and you have a £500,000 limit, and you think because they're both below £500,000, that's fine. If they go in the same boat, it's not fine. You're over your limit, and the insurer's only gonna pay you the $500,000, and you're gonna be 50,000 out. So that's something to be aware of. And then finally, the contingency or seller's interest. That's just if the buyer. So if you're exporting something and the buyer's responsible for arranging the insurance, if it's an ex-works terms, and you're not entirely comfortable that the buyer is going to arrange sufficient cover, and perhaps it's not been paid, you can have a contingency cover which will pay if the buyer's insurance doesn't. Very important to be aware that has to be kept confidential. You can't tell the buyer that you've got that contingency cover, because then they could think, well, I'm not gonna buy the insurance myself. So that's the marine cargo. Moving on. Next thing is professional indemnity, which I suspect probably isn't too relevant, so I'll run through this pretty quick. But this is just the cost of compensating your client or customer for loss or damage if you've given negligent services or advice. If you offer your knowledge or your skills or design or advice as part of whatever your business is, and that is separately to the product itself. So if I have designed a product for someone and say, this is the thing, this is my design, and the product will cost you this, but my design is going to cost you X, the product is Y, then you need to have professional indemnity cover. The claims tend to be around negligence, misrepresentation, violation of good faith, sometimes inaccurate advice or flawed design. Just a few things to be aware of are the common exclusions. Usually most policies will exclude failure to perform. So if the product's not actually faulty, but it just doesn't do what it's supposed to do, there's no cover. It will exclude injury or property damage generally, unless it's as a result of something to do with the advice. They'll usually exclude liquidated damages or punitive damages. It will usually exclude dishonesty and fraud, and it will always exclude things that you were aware of at inception of the policy. That's because it's a claims made, which, moving into those bottom lists, claims made just means that it's the insurer at the time the claim is made that pays, not the insurer at the time the incident occurred. So if the incident could occur, you might have designed the thing in 2018. The claim isn't made until 2020. It's the insurer in 2020 that covers it. So I think that's enough on professional indemnity. If anybody's got any questions about that, they can pick up at the end. So moving on then to just a few other things just to be aware of. Employer's liability is a UK legal requirement for any business that has employees. That's to cover injury or illness to your employees. Just the thing to be aware of here is just that if you're exporting, sometimes you might need to have employees traveling overseas for work. And it's important that, yes, to have travel cover for that. It's also important to advise your insurer on the employer's liability side, because insurers may want to apply additional costs or terms about that. They also, if the employee is in particular circumstances, e.g. if they're offshore, if they're on an oil rig or something like that, again, that's crucially important. Contractual issues just to be aware of is that quite often businesses, will sign up to, I'm selling this thing, and the sales guy will do the deal with someone whatever territory it is. The contracts get exchanged, and sometimes people are very accurate about, we want to follow this format, or we want to follow our format, or our standard terms apply. The issues that when there are issues, they tend to be because either one customer has just slavishly signed up to or one person has slavishly signed up to the other's terms and not actually read them, and it turns out that the terms exclude liability for certain things, and then there's no insurance cover. The other circumstance that arises is where both have their own standard terms and those disagree, and no one's ever sat down to say which is the one we're following. We've had an example in the past where an exporter in the UK was exporting product to a wholesaler in the US. The wholesaler had to hold harmless in their contract. That's a type of clause that basically says we're not at fault for this. The wholesaler stored the product in a warehouse that didn't have heating, and that meant the product got damaged. And then they didn't realize that. They sold them on. It exploded and caused damage to the end purchaser. The end purchaser sued the wholesaler, who just passed it on to the supplier via the contract. So even though the manufacturer was not at fault there, wholesalers' terms were such that they were able to pass that on, and the exporter was left with a massive legal bill and no insurance. So it's really crucially important to check contracts and make sure that that everybody knows what we're doing, and also on the Incoterms, it's also important to make sure that if you're going off particular terms, that it's correctly stated. Freight forwarders and others will give advice on that, but you need to make sure you've followed the correct format, because that can also cause a problem. Product guarantee, product recall, these are really expensive. Few organizations purchase them, but they are available. Product guarantee that's cover for the cost of replacing or reworking or recovering product if it hasn't performed its function. It's a contractual liability really, and it's normally a claims made cover. Product recall is the cost of recalling a product if it's going to if the continued use of the product is going to cause a legal liability to the manufacturer. So those are just some other things. Just in very general terms, in summary, if there's one message that sort of underpins all of this, it's just be aware of the risks that you're exposing your company to. So there are all of these things we've discovered or we've discussed in the UK. Most businesses will have some level of insurance. They will. These things might happen, and it's a nuisance. If you have a products liability claim in the UK, it's a nuisance. But generally, it gets dealt with. Your insurance broker can help you. You're dealing in your own language, in your own territory, in your own law, and it's a nuisance, but it's fine. If it's internationally, it drains your business of time and money in legal costs here and in the market where you've sold the thing, and airfares and all sorts of things. So it's just crucially important to get it right, and be aware of what your risks are and where they lie, and always the key thing is speak to your broker, because it's your broker's job to guide you and on all of these things. So that's that. If we go to the next slide, just to kind of sort of finish up, we talked. Do we have William? Was there one about
I'm not
Brexit?
sure there was.
No.
Sorry,
right.
Don't
worry. I'll just briefly on Brexit. Most insurers are prepared and ready, and most insurance brokers are prepared and ready. I know different people have dealt with it in different ways. We in Gallagher have what's called Gallagher Nordic in Sweden, and that will pick up EU business as and when necessary. So the insurance market generally, Lloyd's have opened an operation in Brussels. The insurance market generally is pretty ready. So there shouldn't be a situation come 1st of January where cover suddenly ceases. Once we know what the sort of plan or not plan is, as it may be, the market will react accordingly, and the insurance market's ready either way. So there's not really serious concerns there at this stage, although we like a lot of people would prefer a sensible deal. And then in terms of coronavirus, you may have seen some of the articles in newspapers and in the media about there's an ongoing test case with a few insurers on cover for business interruption arising out of coronavirus. But in general, and that's an ongoing case, and we'll see how that pans out. But actually, insurers, even if those cases go against the insurers and they end up having to pay out business interruption claims, it's not actually that big of a number in the grand scheme of things. So the losses that the insurance market are talking about are running into the low billions. So maybe like 2-3 billion, including claims already paid for travel and stuff like that. So that seems a lot, and it is a lot, but actually an average hurricane in the States can cost that easily. And so it's not the losses for coronavirus to the insurance market in terms of claims are actually not that much of an issue. What is an issue is that the insurers make most of their money from investments. So insurers must maintain huge capital reserves, and there's regulatory limits on that, and that capital is invested, and obviously we've had equity and stock and bonds and everything has significantly decreased in terms of return, and that means that insurers have a gaping black hole in their accounts, and that is leading to really extreme conditions in the insurance market, very volatile at the minute. We are getting, it's, as I said earlier, it's very challenging, and we're getting insurers increasing premiums significantly. We're getting insurers reducing cover. We're getting insurers reducing capacity, which is how much cover they're prepared to give. So in all of these things, and this is just general advice, if your insurance is due for renewal in the next 6 months, you need to be thinking about it almost 6 months in advance and talking to your insurance broker and having a plan, because it may be that difficult decisions have to be taken about what extent of cover that you can have, and whether you need to decide whether you may want to self-insure some element, or look at high excesses and things like that to keep the cost reasonable. So that's it for me. Really, that other than questions from people. So I guess I'll hand back to William. Hope that's useful for people.
Yeah, thank you, Ian. I think that was very useful. So thank you so much for the presentation there. Lots of useful advice and information for everyone there, I hope. Just to give Ian a bit more of a breather, we'll do another poll quickly. It's just one of our weekly tracking polls, and just to ask people what the main impact of COVID-19 has been on your business. You should be able to see that on your screens now. And just a quick note of apology earlier, the slides went forward a bit quicker before. I'm on duty on slides today, but so is my cat apparently. So apologies on that slight hiccup. But just a reminder, while you are answering that poll, you can ask questions at any point over the next 10 to 15 minutes using the question box on the control panel to the right-hand side of your screen. So I'll just give everyone a few more seconds to answer that. And in terms of Brexit or coronavirus slides, I will double check. I didn't think I had anything through, but I will double check. And if there are any additional slides, we can send them to everyone afterwards. So I'm just going to close the poll now. And here are the results. So 49% said decline in demand for our services. That tallies with the previous polls, previous times we've done this poll. 24% said rise in price of freight transport, 20% cash flow issues, 4% delays at customs, and fortunately only 2% staff off sick. But to those 2%, I hope you feel better soon. So on to the questions, and we had a couple of questions in from Bill and Isabel, basically asking from a very practical level for our small businesses, how big a business do you need to be before you start considering insurance? So Bill says he's a micro business with a turnover of over less than 100,000. How can I afford insurance for exporting?
Yeah, it's a great question, and unfortunately sometimes, like as I was saying earlier, difficult decisions have to be taken. One option, if you're buying, sometimes things like marine cover can actually not not be quite as expensive as what you might think. Insurers' minimum premiums often minimum premium is the minimum level that the insurer is going to take, accept as a premium. For marine, that could be different insurers at different levels, but it could be £500, could be £1,000. That's kind of the minimum that they might start at. If that's beyond your sort of your ken or your level of risk or the cash that you've got, another option is if you're using a freight forwarder. Quite often they will have they will be able to provide cover, and what they're effectively doing is they almost, it's like a wholesale thing, and they can do single transit covers for, it could be 30 quid, 40 quid, 50 quid, depends on what it is and where it's going and so on. But I would say speak to your freight forwarder. If you're going to export something, you probably be doing that anyway, and quite a lot of them will have that facility. Speak to the insurance broker, and generally we are in the insurance broker world. We're very free and easy with our time, and we will happily give free advice to people. And so pick up the phone, call someone, and just ask them, if I'm exporting whatever it is, it's X amount of it, it's going to what country? Can you tell me if it's going to cost me or what's going to cost me? And they'll give you a quote, and it won't cost anything to get an idea. So I would say a couple of different options. Speak to your broker, speak to your freight forwarder. But I appreciate it is difficult, and sometimes it's just a cost too far. You just got to be aware that you're taking the risk of whatever it is. Hope that answers the question.
Mm-hmm. No, thank you. That's a very good answer. Thank you, Ian. And a question from Phil, who's asked about insurance policies required for insuring against importing types or importing losses. Could you say a bit more about import and insurance?
Yeah, so a couple of things that I mentioned in the presentation apply the other way around. So the subrogation rights is a key one. Often people importing, it'll be from China. Chinese companies generally will not pay if their product, if something goes wrong with the product and there's a fault of this claim. That is changing a little bit, to be fair, and we have had some success with claims arising from stuff that's been imported from China, but it's still very, very difficult, and I certainly would not expect or guarantee. If you import from the EU, then you can be pretty confident that if you've read the terms and there isn't a hold harmless, so there's no restriction of the subrogation rights, you can be pretty confident that you can make a claim stick to your supplier. If it's beyond the EU, it gets progressively more difficult. And on the marine side, again, it's the same as the marine for exports. You've got to be aware of who has the responsibility. So what terms are we using? What Incoterms? Is it X works? If it's X works, do I have appropriate cover for it? Is it a DAP or some other CFR, some other Incoterms, or is it even not Incoterms at all, and we're using the US version or the Chinese version or whatever else it is? So you just I would say be aware, read those things. It's amazing how many people don't. And then give that information to your insurance broker, who can then get the cover to match up with what the actual risk is. So yeah, just read, be aware of what the risk is, and read whatever contractual terms and that you've got or that you've agreed.
Thank you, Ian. And a question actually just on Incoterms from Michael, who's asked, even if you think the buyer won't get cover, why would the seller get contingency insurance when X works means the buyer is responsible?
Yeah, it's only to protect your profit ultimately. It's going to depend. If they've paid in advance, then absolutely that's their problem. If they haven't paid you, then I would say that's you're covering your profit and your income. So in simple terms, if they've paid and they don't cover it, well, that's their problem, and I wouldn't buy insurance for that. I'd be quite happy to walk away. If they, of course, that being said, you might have a commercial reason is the other thing, I suppose. If this is a supplier if this is a customer who you sell loads of stuff to, and you want to keep them as a customer, well, maybe it's a different answer. But yeah, if they've paid you, no problem. If they haven't paid, then I would certainly consider having the contingency cover. The other thing just to note is that a lot of insurers will give the contingency cover as a free extra and may or may not charge for it. You just have to ask the question. So it's not always a cost. Sometimes you don't pay for that.
Great, thank you. Just to remind everyone, you can ask questions using the control panel to the right-hand side, so please do feel free to ask away. A couple of interesting questions. So Gladys has asked, what is the best insurance that covers fraud from suppliers, i.e. if they do not send goods in the container? And then we had another question from Raymond, who's asked, is sea piracy becoming more relevant in insurance clauses as well?
Yeah, so take the fraud one first of all. Actually, far be it from me to suggest that the insurance market isn't always the best solution for things, but actually, things like the scenario where you're importing something and then the container arrives and it's not there, and those kind of things. Actually, the international trade finance and things like that sometimes is a better way of dealing with that. Invoice finance and things like that is a better way of dealing with that than insurance. Just because there are other reasons why you might be doing that anyway, and the insurance will cover those things, but you've got to have. I mentioned earlier on in the presentation about if you have a claim. So if you're in that scenario where supplier has said they've sent something and then it's not in the container, it doesn't arrive, or something like that, it looks like a fraud, the insurers will cover that. But you've got to get all the documentation that I mentioned earlier. So you'll have to get you'll need to ask that business for the bill of lading and all the rest of it. And if it is a fraud, the chances are that when you pick up the phone, the number dials out and the emails don't get answered and the business doesn't seem to even exist anymore. So and that then means it's sometimes difficult, not impossible, but difficult to get the claim paid. Whereas the invoice finance is a different approach, and that's just that you're obviously you're paying a premium for that effectively, but there are different options there. That would be something that I would talk to the relevant person, talk to they're not going to mention any names, but we all know who they are, and talk to them about that. So that would be that. The sea piracy thing, it was a real issue a few years ago, maybe 2 or 3 years ago, particularly in Yemen and Iran, Straits of Hormuz and around there. It's not so much of an issue currently, but it's something that tends to it goes in cycles and pops up, and it's where if there's a bit of political instability in a region where it's easy to operate, where there's a bit of lawlessness, which is what the situation was in the Middle East, then it can come up, but it's at the minute doesn't come up on the major list of risks and major list of losses. But yeah, if you're sending things, just be aware of where you're sending things, I suppose, would be the advice there.
Thank you, Ian. I'll give people a few more seconds to ask any other questions. I think the only other question we had was on recall procedure, which I think you went on to talk about a bit more in another slide. So I'll give people just a few more seconds to ask any more questions, and if we don't get anything, we'll finish up, I think. So, right, I think on that note, we're out of questions. So thank you once again to Ian for the presentation and the answers there. And a reminder that you can download the slides via the handout drop down in the control panel. But yeah, Ian, thank you very much. That was a great presentation. Thank you.
Thank you, everyone. Thank you.
In terms of upcoming webinars, the UK Customs Academy are back on July 15th with a webinar looking at methods of import valuation. That is a must for any customs professionals or businesses needing to learn about customs procedure for life post-Brexit. We will send you links to that webinar before the end of the week alongside a recording of today's webinar. You can view the recordings of all the Open to Export webinars at opentoexport.com/webinars. The Institute is still online, offering a range of online support and telephone assistance throughout the pandemic, including our digital training courses and export masterclasses, international trade surgeries, which can be conducted over the phone, online qualifications provided by both the Institute and the UK Customs Academy, daily bulletins bringing you all the key trade stories, and of course, the free articles and webinars on the Open to Export platform. With the transition period with the EU due to end at the end of the year, we do recommend you continue your Brexit preparations, especially as many of the Institute's relevant courses are still fully fundable by government grants. And in terms of preparing for the practicalities of coming out of lockdown, you can access our new help desk and document library called IOE Business Shield if you are a business member. And this provides information and assistance on all your HR, health and safety, legal and tax issues, including support for managing the furlough and safely returning to work. You can find more information about all our support on export.org.uk, and please feel free to contact us if you have any questions or queries. Through these historic times, it is also really important that we support each other and share information and wisdom and best practice for global trade and the challenges ahead. Membership with the Institute gives you a support network and a wealth of information to ensure that you have everything you need to meet the challenges of what's coming up. To find out more about membership with the Institute, please do look at the site export.org.uk/membership, and our membership services team will always be happy to answer any questions you may have. But for now, that's all from us. We hope you found today's webinar useful, and please do take our exit survey to let us know what you thought. Till next time, stay safe and goodbye.